Good morning, everybody, and welcome to the Option Pit Morning Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Earnings Tuesday. That's right, Earnings Tuesday, and as of right now, we'll go take a look at it, but everything's kind of not great, I have to say. For some reason, bonds are selling off, but earnings not great. Anyway, so, more important stuff. If you take one volatility trading course, it should be ours. Did it explode? Look, how good was I yesterday about the short squeeze, by the way, in that? How about some props, Giovanni? I know. Did you see this in our chat yesterday? Oh, yeah, we talked about it a bunch. Actually, the trade we ended up looking at is Strangle. Buying one. 15 to 15.11. Anyway, so, alrighty. And with that, it's just in Squeeze City. Anyway, the one volatility trading course you should take is ours. Why? Well, Option Pit, we kind of specialize in trading volatility. And for about the cost, like I said, if you send me a note, Andrew at OptionPit.com, we'll take $10 off. It's an 8th on a 10 lot. Okay? And it'll probably save you that much. Okay, November 7th, if you want to see what our teaching is like, our training here at Option Pit, the education, take a look at the free webinar here. Introduction to VIX and Volatility. I believe Mark did that one. Okay? Now, on to, besides Weight Watchers, again, here we have the very fine earnings calendar from Liveball. What's coming out? And mostly, what we're seeing is, I'm pulling up Harley, a lot of very mediocre before the market opens earnings. Financials, we've got Boney Bank in New York up a little bit. Other small banks kind of unchanged. Again, not enough really to drive us higher, except that we bounced off whatever happened on the Chinese issue, right? Now, of course, Wall Street Journal saying, China growth may be a little better than everybody expected. I think that took a lot of heat out of the vol futures yesterday. Okay, earnings right now, I'm just going to call them as we've seen so far, with about 15-20% of them out, pretty. Just say mediocre. Not good, not bad. Nobody's blowing the doors off anything, though, as yet. A lot of big tech still has to come out. But as of right now, just not a lot happening. Let's see. I'm pretty sure Google's getting there. Yep, we got another couple of days. So, a little bit of, we've had, about 2 straight weeks of rally. We're expecting the market to pause a little bit, however, it is not. Okay? Which is essentially what it's not pausing as of yet. Today may be the first day, but earnings so-so. Index up. They marked the VIX down huge. Today is VIX expiration. So, again, trades we'll look at again. I think the Weight Watchers trade that we looked at yesterday is probably past. It's all over the place as far as the stock is going. But we could see more action. We'll look at the borrow rate in there just for giggles. We talked about this on Option Insider Radio last night. And today, it's basically, almost a full dollar. It's at least 80, 90 cents. So stock very hard to borrow. Either the shorts are covering and they're still getting squeezed, and we'll see how long this goes. We looked at it yesterday. It was still prone to squeeze and getting squeezed again today. We'll take a look again. IBM, just as a dog, continuing to be a dog after earnings. It's just starting to be reminiscent of IBM in the early 90s when everybody was switching to PCs and they couldn't sell any mainframes anymore. And they rejiggered, and are probably in process of doing some massive rejiggering. I'll tell you, that stock went down to like 30 bucks from 200 in the early 90s. Obviously, they're making a lot more money now, but when it gets ugly for their business, it's hard to turn it around. Right now, it's just not looking very good. So overall, market is still holding up. Volatility traded into the 14 handle on the close yesterday as we marked VIX. Probably, I don't think it's the low tick for the week. But again, mediocre means we don't really crash, we don't really rally, we just kind of beat around. But we discussed yesterday, volatility probably fairly priced. There's not a lot of room for it really to go down a bunch until, again, we have better earnings or we have periods of what we'll just call sustained nothingness, where the market's just not making those big moves that it was over the last couple of months. So we'll probably look at IBM, look at VIX. We will look at some earnings. We'll take a look at the vol products, although I think there's not a ton to do in them right now. The only thing we do have, though, is we had fairly healthy contango was sort of back in play. And all the vol products are decaying. Well, it's funny. October is just over the cash by 16 cents as we speak right now. So, but VXX is still decaying a little bit. There's a little bit of the normal decay profile, but what's funny is if you look at November at only 90 cents over, that's really not a lot for a full cycle. So it still feels like these futures, these short-term futures, are looking for the VIX cash to drop a little further, especially if we get the same thing happening here. The reality is, when the S&P 500 is only the full SPX is only moving 33 cents. Okay, that generally is going to be a vol killer. There's no way around it, right? So without any real movement, vol comes down. Okay. So anyway, with that, we are off the chat today. We have our pro chat this afternoon, and we'll be gearing up for our webinar in a couple of weeks. All right. Thank you for stopping in, and we'll talk to most of you a little later.